TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and The Tech Insider, David White.
And welcome to a beautiful March 12th at the headquarters of Technical Trading and Investing. It is TFNN.com, where we come to you every day between 2 and 3 for the Power Trading Hour with your lovable and huggable and squeezably soft host, David White. Yes, that's me, squeezably soft. Yes, getting softer every day out here. So maybe it's time to hit to the gym. Well, after yesterday's show, I was a little bit depressed. I had to say it. But then, every once in a while, a hero comes along. Yes, he does. He makes you feel good about being American. And yesterday, Justice Tingling, he came along. He made things better. He threw out that worthless ban on soda in New York, and hopefully dashing the hopes for others to hold us under their thumb. We're Americans. If we want a pail of 64-ounce Coke, it's ours. No one can tell us no. Now, I don't want to drink any. In fact, I don't drink any sugary sodas. In fact, you can witness my drink today. Ooh, water, cold water. Now, what does it matter? It's just a thing. And for those people that want to tell us that we can just, that because we're giving them health care now, that there are slaves and they will do exactly what they want to do, I say nay. Nay, I say. Anyway, in his ruling, he said the Board of Health, which is appointed by the mayor, had overreached in approving the plan. He wrote that the City Council was the only legislative body with the power to approve such a far-reaching initiative. And, of course, since everybody hates it so much, there's no way the City Council is going to approve it because they would get tossed out. So maybe the end to this dirge against freedom. And we've got actually a freedom-packed show today. All kinds of things. We're laying off the scourges of all kinds of things. One of the most interesting articles I saw today, and I don't know where I missed this, because if I would have known this, I would have jumped up and down. But apparently there is a law, and of course since Puerto Rico is a protectorate of the United States, if you are a United States citizen, you can move to Puerto Rico and you will pay no additional state or local tax on any of your capital gains. So far in the last year, 10 super wealthy Americans, and what they said was these people having more than 100 million in capital gains have moved to Puerto Rico and taken their capital gains down in that country. They're hoping that a lot of rich people will move down there and start investing in the local economy, buying and going to restaurants and doing stuff. Why everybody snubs their nose at the rich here in the States, go to Puerto Rico. They like you. They're more than willing to welcome you with open arms. And my thoughts of moving to Costa Rica have dimmed. I'm thinking that maybe Puerto Rico is the new place. Nice and sunny, protected by the United States, and none of those horrific taxes like several states exceeding 50%. But apparently there is a bunch of talk just in the last couple of days that Paulson is getting ready to leave the United States and move to Puerto Rico. He has somewhere around $4 or $5 billion, and I think I'd move to Puerto Rico for $2.5 billion. I'd move out of New York. It wouldn't take anything for me to do that. I'd move right on down there and be laying on the beach and saying, "See you later, suckers." And this is not the only one. Even in China, the oppressed are standing up. A new tax loophole on property sales means that if you have gotten divorced in the last year and separated from your spouse, you get to walk free. And, of course, they have some fairly significant taxes on property sales over there. And, of course, we know about all the property over there that is the ghost towns of China. But what has happened since this new law has gone into effect in the last 10 days is they've had over 150,000 filings for divorce, which is fairly and extremely rare in China. So even the Chinese are getting into the whole avoiding taxes deal, and they're acting more like capitalists than we are. So what else do we have? LinkedIn has bought Pulse. If you watched the Tech Insider Hour with Tom O'Brien, I've brought this up before. It is one of the neatest apps that I have on my tablet. I think it's available for Apple and the iPad, but I use it, of course, on my Android device. But if you want, and especially me, I'm looking at 20 or 30 news feeds a day. Normally you'd read them in your RSS reader, maybe. In fact, I've got it in my email program. But I'm watching all the stuff happening in technology, all the bullet points of all these writers that are blogging from all these wonderful places like Austin this week. And, of course, since they do that, I don't have to go, which makes me happy. I'm more than happy after traveling 1.5 million miles and 6 years in the 90s. On airplanes to sit at home. And it's nice. Anyway, this Pulse thing, if you don't have it, you probably ought to check it out in the app stores for Android and iOS. But it is one of the best readers out there. The interesting thing is exactly what LinkedIn is doing. And hang on just a second. I've got some kind of message up here that I have to get to if I can go through. Need to size my image. Too much white. Nah, everything's fine. This is the way it is every single day. Size my image. My image is just fine. With more peanut gallery. No one knows the slings and arrows of outrageous fortune that is slung upon me in this studio each day. With Steve, walks in here about 5 minutes before the show starts, my engineer, and comes in, and he's more than willing to yell and shout things at me, make goofy faces, and of course, on Friday, wear those obnoxiously weird Jackie Stewart hats that make me think he's out in a British sports car. But anyway, that's pretty much going on. It's a very quiet day out here in the markets, although we are down a little bit. The volume has been low. Let me update this just to make sure. We're off 7 points on 2.1 billion shares. So again, yesterday the volume was light. Today the volume's light. Looks to me like we are setting up and trying to set up for some kind of expiration in this area. And of course, during options expiration week, normally 80% bullish, a tough time to be short. I suspect that this market is telling us, and along with 6 new IPOs scheduled for next week, at least people in the marketplace think that this market is going to hold itself up for the rest of the week. And I got to sneeze. It's damp and dank out here today in Clearwater, and I got just a little bit of chill. It's very humid outside, a little bit cool, and I brought that into here, and I knew that I was going to sneeze. They're supposed to have a nice little button for you to hit. I've been talking about it for a while, but no button for me. So whatever comes out of my mouth, you're probably going to hear at least part of it before you can get to the pot on the big mixer board out there. Anyway, we were looking at down 7 points on the S&P cash. It is, it's the kind of day that you look at out here. I'd love to see I'm fairly bearish out here. I think that what we have setting up, when I looked at the options yesterday, when we looked at Apple, trying to close above 435 yesterday. It gave a valid buy signal closing back into the range. And then what we have today, that is a big downgrade by one of the biggest bulls in Apple. And that's pretty much put a little bit of cloud cover on this thing. I'm wondering one or two things. Was this guy and his company short? And or were they wanting to buy more at this level? The volume just hasn't really gotten anywhere close to the 44 million shares down below that 435 level. We're looking at a little less than 12 million shares today. So, is there something there? It's hard to say. We just one day above that 435, and I thought that maybe the Apple would be pushing the market through expiration, but no such luck. A little bit of downgrade is all it took to drive Apple down about $8 today. Google's off about $9, almost $10. We've been talking about that being a little poofy. I'll give it that way. It's a little poofy. And let's see. Let's take a look at that one. And I'll bring that up here just a second. There we go. It was looking toppy. I suspect that we're probably going to have at least one more test of the 844. At that point, if the volume was very light, that would be it. Actually, this is not a bad chart out here for a buy signal if we continue with this very light volume. 1.5 million shares so far today. And, of course, you actually had a nice little gap up on 4 million shares on the 5th. This thing's kind of been sideways, going back a little bit, so it's just filled the gap today. No real sell signal, but it is awful stretched and has been for a while. But I'm looking for this thing to come back in that 730 to 705 range, and that huge gap up, that started this whole run back on the 23rd of January could and should continue. Let's look at Apple again, just because I mentioned it but didn't get back to it. We got a lot of other stocks to look at. And, of course, you can always give me a call at 877-927-6648. But that's what I was looking at, this 435. Let's zoom in just a little bit. Had huge volume, 2 volume days out here. And, again, huge volume days, huge gap downs a lot of times, basically turn a stock sideways. This thing did have kind of a little bounce out of here, but we are more in a consolidation zone or a congestion zone than in any kind of real definitive path. I suspect we're going down to 390, but during expiration week, I could see this thing getting as high as 450, setting up the next ABC down into that 380 range. So we'll continue looking at those. Again, you can give me a call at 877-927-6648. We had a few stocks out here that were interesting in movers early on in the day. STX, Seagate, a little bit of an upgrade. They also say that they have shipped 2 billion hard drives so far, becoming the all-time leader in manufacturer of hard drives. Not a lot of volume so far. This is one that did gap down on fairly strong volume on the 29th of January with about almost 17 million shares. Tried to pop back into it on February 8th and was rejected. Probably going to be heading to that level in the next day or two. And what do we got up here? Yeah, I suspect you're probably going to see about $36 on this. Again, not enough volume to break through that movement down. But give me a call, 877-927-6648. I would appreciate a call because it is kind of a quiet day out here. We'll be back in a minute.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
And another one we're going to look at here while we're waiting patiently for callers to call in at 877-927-6648. That's 877-927-6648. Our engineer Steve has he said that he is willing to hold his breath and wait for callers. I told him that we just make sure and have them ask for Blue Boy. So ask for Blue Boy when you call in at 877-927-6648. Anyway, we're looking at Life Technologies Corporation, LIFE. It is filling its gap. It came down on at least decent volume. This thing did gap up, and it's back up through that. A little harder to tell, but one of the few real movers out here. It's up about 2.5% today, but it is coming back into this gap down. That gap happened on the 20th of February with 5.7 million shares. Coming back and filling that up. Very light volume today in 1.6 million shares. So let's see what else we have out here for movers and shakers in this market. And what else we have? Of course, what is it? I keep on wanting to say RIM. I hate these guys for changing their name, but it is now BlackBerry Research in Motion. And we talked about them basically running on, of course, this being the first day that you can actually order their product in the United States. Back when the news came out that they weren't going to have this available, or their new BlackBerry 10 model available, the stock sold off fairly hard, and that's what you're seeing back here from this 1832 high on January 24th to the 12.15 out here. Again, a stock that's perpetually 40 to 50% short interest, so if you're playing it, probably intraday is the only way. But a little bit of snow, the news, we're coming back into this. Again, this is a stock that is like my favorite TV show on Sunday nights now, The Walking Dead. It's dead. It just doesn't quite know it. They're still moving around out there, shaking. But I just, it's beyond me any way that this company is going to survive long term. Yes, were they able to put some tourniquets on and at least halt the bleeding a little bit, come out with some decent new features? Yes. But the idea of them getting any kind of market share that is going to be meaningful is very tough for me to believe. But again, one of those sell the news kind of things out here today. And of course, in the NASDAQ 100, the biggest loser at the moment. Another one that we've been following here is Baidu. I was, I don't know, 2-3 weeks, maybe 4 weeks ago, we brought up the problem with any of these stocks in China, and that is that there is an overhang. That is the SEC not getting proper documentation. Of course, why most people want to ignore it. I dislike any of these China stocks. The chart doesn't look all that bad, though. We still have yet to get and test that low, and you probably want to be putting this on your radar, on an alarm, and see how this does come and break the December 6th low at $58.96, 8.1 million shares. I mean, we basically are in the 3 million share range as we're getting close, and well, we're inside that candle of the December 6th low. But at this point, you're going to have to see it. I just like that the energy did pick up a little bit compared to the last leg up. But maybe the SEC things get handled. I might be looking differently. But certainly at these lows, it's doing exactly what it should do. Unfortunately, you've got probably the overhead starting at $100 where this huge gap down started. But again, you have to look at these China companies. But numbers in China coming out have not all been all that great. And let's see what else we have out here. STX Gold, Rheingold up 2%. You know, we had a nice little pop in gold. Let's take a look at the GLD today. A lot of people asking if this is a head fake. You certainly could have an island reversal in gold. It popped up to 154 today, and 154.14 is the last tick I show here. Very light volume so far, so we'll have to see just how well this works out. But very light volume, a little pop out here. I'm thinking I would love to see this thing back into the 158 area and fill this gap down that is open, and maybe even into the 160 area to set up the next huge move down in the marketplace. So we'll take a look at GLD. We're seeing a little bit of strength in a couple of commodities. The other one is natural gas. Unfortunately, this is almost the end of natural gas season. We are approaching the previous high, and if I'm not mistaken, we have 340,000, very light. I'll have to check this to see if UNG is correct. Let's see if it's out here. Anyway, we'll be back in a minute. You can always give me a call, 877-927-6648, 877-927-6648.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
When we went to break, we were getting ready to talk about natural gas. It's pretty much up at fairly decent highs. This is pretty much the end of season for natural gas. So looking for probably some weakness through the summer. Maybe this is the year that this thing takes off and never looks back. But probably going to see a build in natural gas across the summer. What we need is some despicably cold weather to really get this fired up, and probably not going to see that until next fall. And don't see a lot of reason to see that a lot of natural gas is used just yet. Some of the new IPOs from last year were ships that could take liquefied natural gas and ship it to other countries, and I think as we see those coming on, maybe we'll see a little bit more demand. We got within a penny of the high in UNG, and that last high was $20.20 on January 22nd. I had 8.7 million shares. We've got 2.1 today. Just not a lot. I haven't looked at the underlying contract, but I will when I get home tonight. But natural gas kind of up here. Wouldn't be surprised to see this being the high through probably the summer in natural gas. And a lot of times you get a little blip out here about July, but this thing could be in this $17.50 range to $20 range for next 6 months or so before we start seeing real movement. So we'll have to keep an eye on it. And again, you can give me a call at 877-927-6648 if you'd just like something to discuss. Someone called in about Apple, and I'm not exactly sure what I didn't explain out here. They got basically they had a nice little pop yesterday. Volume did increase from the day before. The biggest issue was that they had, I think it was Jaffray's analyst, come out and say that there would be no Apple TV this year. Most likely it would be into next year, if at all ever. And so basically dissing that they had a new product coming out for this year. Again, not a lot of movement considerably, but just that it's holding under this 435 continues to be somewhat problematic, especially with the light volume. And what do we got? 429 with 12 million shares. And, of course, everything below that huge move at 435 is lighter volume. And, of course, closing above 435 was a legitimate sell signal, buy signal, and short covering signal if you were short. But it just never looks strong out here and always looks weak. We're going to go through some other companies here fairly quickly. The home builders out here, another one of these that broke above the previous high, did it with volume, but still can't hang out there above that. The XHB is the home builders index. You had the last major high on February 13th. It came with 4.6 million shares. Had a huge doji on the 8th of March, and that came with 1 million more shares than that previous high. But we are closing back below it. And it's not an uncommon pattern where we see a lot of dancing at the tops with higher volume, but these stocks continue to pull back into the trading range. Again, we're seeing that in Wells Fargo. Wells Fargo, except not on heavier volume, lighter volume. WFC, and it looks like a lot of these banking stocks may have had their last gasp out here today, but we certainly are looking at the September 14th high at $36.60 with 42 million shares in Wells Fargo. We've gotten through that, went above it, and look like we have a good chance of maybe closing below it today. WFC needs to close below 36.60, but certainly we're looking at 42 million shares compared to 19 and 11 today. So down on lighter volume. So maybe just back into this trading range. But again, very curious behavior. Waters Corporation, another one of these that's kind of a big high flyer. Had a huge run back from the $80.04 low on November 15th. This thing has gotten up to where and what has been resistance in the past. The April 2nd high, $94.47 with 580,000 shares. Got into it just the last few days with 410,000 shares. We've brought this one up a few times. We're going to go just a little bit longer out here. This thing had a huge, massive gap down, and that's what we're going after right now. That gap came down on, is that right, 4 million shares? 4.5 million shares. So we continue to see this low come in here. Trying to these highs test this gap from back then, but again, fairly lighter volume out here. But what can you say? Sherwin-Williams, another one up here that's getting and testing relative highs. And of course, all these housing stocks, everybody's in them. Who's left to buy them? Well, I can't even say it. Sherwin-Williams. Sherwin. I don't have any Sherwins. I've never met a Sherwin. Sherwin-Williams, actually, up here in the last two previous highs, 167s were just under 1 million shares. We've had 500,000 yesterday, 400,000 today. So getting into that into the line up here with very light volume again, which is problematic. Let's go back and look at the not doing much out there. 2.3 billion shares on this tape. So again, this yesterday was the lightest volume for the New York Stock Exchange consolidated tape. Looks like we're going to come in probably close to that 3.2 billion shares projected today. So even this, the movement up is light, the movement down is light. But we are off today, which is a rare occurrence. 7 days straight up, albeit light movement out there, 2, 3, 4, 5, 6 points sometimes. But a nice little move in off 7 points today. but again on very light volume. What else do we have? Just off 25 points on the S&P. So nothing to write home about just yet. International Game Technology Group, another one of these that looks like maybe it's crested, down a little bit today on light volume, but certainly a lighter volume stock out here. I like to see 1 million shares a day in most of the stocks I trade, at a minimum 300,000 shares. This one at least makes the minimum, but February 20th high came in with 500,000 shares at $12.51. Went above it, closed below it on March 8th. So we've had next 2 days a doji and a little bit of pullback, but again, not a lot of volume so far today. Dow Jones Home Construction Index, ITB, another one of these that looks like it's hit its high and is starting to pull back just a bit today. The last major high out here came with $23.87, 3.9 million shares. We've got in that with 2.5 million shares, and it is closing back. So maybe a little bit more discussion about whether or not the housing market has made a short-term high, and certainly a couple of indexes out here showing it. Certainly not getting any volume backing that up in the greater marketplace. But I suspect we're probably going to close out here at about 1552 on the S&P cash. The options that I saw yesterday, and one of the reasons I've gone flat, are showing a fairly short expiration. I'm suspecting that there won't be a whole lot of money to be made in the indexes going up and down, probably until next Tuesday. We could probably meander around here for 4 or 5 days. We also have 6 IPOs coming out next week. That normally means that the big guys of the Wall Street think that they're going to be able to hold the market up and be able to push that paper out on us, unsuspecting Main Streeters next week. That's at least tells you that they think they're going to get it out. Some of these were pretty ugly IPOs, which makes me think that they're thinking that next week is the last gasp of this marketplace. So we will be taking a look at that. Iron Mountain is IRM. This thing came down on monstrous, huge gap down, and kind of been bouncing back into this big gap down that when did it happen? On November 19th, 18th last year. And, you had some decent volume, fairly light volume coming back into this, but not a lot of movement out there. Headwaters Incorporated, HW symbol on this one. Not a big high flyer out here, but certainly one that also is looking like it's giving a little bit of a clue that it's topped out. The last major high on it was on January 24th with 1.8 million shares. We did that with 1.1 million shares on March 8th, and it started to pull back. But every close below 1040 out here is putting a little bit more strength in a top. Ethan Allen, of course, another play on people buying new houses and filling it full of brand new furniture, has been banging around these highs. This one out here, more of a coin flip, and I think maybe a good way of looking at this marketplace. We've had several highs in this $30 range. The one with the biggest volume was November 1st at $30.29. We've gone above that. As long as we continue to close above it, it'd be interesting. Volume has just been a shade lighter. As of yesterday was 430,000 shares compared to that 580,000 shares. So certainly haven't broken it with a sign of strength, but we continue to hold up there. Maybe wanting to put that one on your radar if you've got housing stocks and you're thinking about getting out and what this market's going to do. Express Scripts, another one of these that got hammered down on monstrous volume. That was on the 6th of November. It came down with 53.5 million shares, but slowly trying to fill that gap. We are testing the last high of February 19th that had 16 million shares, and very light volume with about 4.6 million shares yesterday, and even 2.6 today. So continues to be rather light out here. Other ones, let's see what else we have out here. CNO Financial. The other ones I saw peaking have been financial stocks. We'll have a couple more of those before the end of the show. CNO Financial is another one of these testing, making some little dojis as it comes up in a approaches this high. February 20th, $11.44, 2.5 million shares. We got into it 1.7 million shares yesterday, and we've got about 1 million shares today. But a nice little doji out here. Of course, not going to short a $11 stock, but certainly fairly interesting. CBS Corporation, the broadcaster, looks like it's topped out. The last major high was February 15th at $45.87, 15 million shares. We got into it with 7.9 million shares March 8th, at 46.13. So we've gone above it. We've closed back below it. There hasn't been, normally you want to see some acceleration right after that top. A lot of these that are hitting highs on lighter volume are not really getting destroyed the next few days. That makes me think that the volume, or at least the broad markets, might hold up for a little bit longer. I know this is extremely painful for everybody out here, but I think we're probably going to close at 1552 on the S&P cash today. We will be putting back a little bit. I just need to see some volume on the downside in these moves when we do pull back, and 2.3 billion shares on the consolidated tape so far today doesn't tell me that there's a lot of people stampeding for the exits just yet. I think it's coming, and when it is, it's probably going to be of biblical scale. But then we just need patience out here. BBT, this one came down on heavy volume, and that was on the 18th of October. Yeah, 18th of October. And we had 16.7 million shares that day. We've been coming back and trying to fill that gap for a few days. The first time, 6.1 million shares on January 18th. Second time, February 1st on 6.3 million shares. And what do we have out here today? 1.7 million shares. We had 4 million shares. 6 million shares the day before that. Certainly not getting into this with any kind of huge sign of strength, and of course kind of rolling over actually today as it gets through that. So I would like to have seen volume come in on this turnaround and pull back in it. We may get one more test, being expiration week of that high of what was it, 1557 on the S&P cash, and that may be it. So I'll have to take a look at that. Assured Guaranteed Company. I'm pretty sure these guys do housing loans. Let me just make sure out here. Oh, boy. Let's see. Credit protection, yeah. This is another one of these mortgage protection companies. And we've been talking about this housing market. We've talked about a few of them down here in South, the smaller ones that had already pretty much peaked. We're seeing some more of these peripheral companies like Sherwin-Williams and some of these others start to give a lot of signs of weakness. Assured Guaranty had 4.6 million shares when it gapped up, and that gap actually happened on the 6th of February. You actually hit the high out here at February 19th. Did we get anywhere close to that kind of volume? No, we're in that 1.5 million share range out here. Are continuing to close above it, but you would certainly want to see some kind of sign of strength as we pull back a couple of times out here. We've got a few more stocks to look at. Still have plenty of time to give me a call, 877-927-6648. And make sure and ask for Blue Boy.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
We're going to look at one more here before the end of the day, and that is Autodesk, and then try to bounce around to a few others. ADSK is the symbol out there for those just listening. But what do we have? Another one out here getting to its highs on lighter volume, but a little doji out here on light volume. January 25th low, this thing gapped up with 8 million shares. We are getting into that today and the last few days, actually. We've gone above it. We've closed below it. We're probably right at that previous high with 1.3 million shares, and that's the highest volume of any of those days. So pretty much getting to the point where a lot of these stocks are just holding up on very light volume and energy. So, just not a lot to report out here on that. The other one I wanted to talk about before the end of the day, not giving any clear signals, but interesting nonetheless, is IBM. This thing is filling its gap, and be very important to see whether this thing can get higher than that 211.76 from October 5th of last year. You had 2.8 million shares that day. You've gotten into it or close to it with 3.7 million shares. I suspect that IBM is going to make a run in the next day or so for that 211.79, and as it does, it's going to tell us a lot whether or not this thing can break out. We've had a few of them. We were talking about Boeing. This thing I think we had so many shorts in this thing, it's just taken off. There's no end to the amount of short squeeze in this stock, up to $84. And I think we were talking about it on the Tech Insider. Just not a lot to short on the stock. They've got orders out the yin-yang, and all they have to do is fix some batteries, and those orders will still be there. If you can save 20% over any other plane on fuel, you know someone's going to buy that plane as long as it doesn't fall apart. And coming up with a solution for batteries seems fairly mundane as we look at it. We've still got a little time out here. Axcelis Technologies is another one I've been watching. This thing did take off, have a sign of strength, and that sign of strength came on December 4th of last year. Started seeing volume in the neighborhood of 1 million shares on it. This one, I really like the setup on it. I dislike the market, but if you're looking at individual stocks and looking for decent patterns and buying patterns out here, this may be one you want to watch. ACLS is the symbol on this one. And what do we have? We've got it pulling back into that gap where it did take off, and it looks fairly decent. Axcelis manufactures and service ion implementation, dry strip, and other processing equipment used in the fabrication of semiconductor chips in the United States. You know, the one thing that is probably the most interesting out here in tech land is Micron Technology. Prices have gone up about twice on memory in the last couple of months. That would suggest that the supply and demand has gotten fairly decent. What it hasn't done is broken the previous high with higher volume. The March 21st low of last year came in with 30 million shares. And we had, he did break it. Excuse me. I was looking at this the other day, and I looked at it wrong. 43 million shares yesterday. We actually got through that, and you've got volume. So now a pullback to anywhere around just under $9 would be a buy signal. This is a legitimate buy on this thing. And again, like I said, we got a few like Boeing. Okay, at 916, we've got 71 million shares. We've come nowhere close to that. So, that's on the longer term, that's it. Keep an eye on that Micron and that February 28th high of last year, 71 million shares at 716. That is a false breakout. We'll be talking to you tomorrow, same bat channel, same bat time for the Power Trading Hour tomorrow.